market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the dollar slipping with polls giving no clear indication of who will win the U.S. election tomorrow. Now, this comes as investors are pairing so-called Trump trade. To talk about the markets and the U.S. election, we're joined by Erik Nielsen, Group Chief Economics Advisor at UBS, and Ross Matheson, Bloomberg's EMEA News Director. So thank you both for joining us. Ross, when you look at some of the latest polls, I mean, there's a slight advantage for Kamala Harris, but actually it could be very thin margin and anything could happen, really.
It is still very, very close. I mean, there was one poll which it looks to be a bit of an outlier, showing some gains by Harris in Iowa, which would be very interesting, obviously, given the history there with the Democrats in Iowa. But overall, the polls are still pointing to something that's incredibly close within the margin of error. So they're essentially neck and neck going into Election Day. And with a reminder that quite a few people have voted already. We've seen a lot of pre-voting that's occurred. So many people have locked in their votes already well before polling day. So it'll be interesting to see how that plays out just in the final 24 hours. But either way, incredibly close. And what is the thing that's going to shift the needle on Election Day? Are people just being coy about who they want to vote for? Have they decided? Will they decide in the minute? And what's the thing they're going to vote on? Is it personality or is it policy?
Yeah, and Ross, I guess the million-dollar question is actually this could be very contested. We could see people in the street. We could have, no real, certainty for the next 40 days.
Well, that's right. So if it's a big win, say, for Kamala Harris, you can imagine that Donald Trump will say that that was caused by the vote being rigged. If it's very close, he'll say similar. And you can see the narrative that's coming already on the Republican side, which is pushing these polls that show Donald Trump well in front. The idea is that he's got a significant lead, that he is the preferred president at this point in time. And that helps shape the narrative for after the election if he were to lose the vote in the end to Kamala Harris, is to say, see, hang on, he was in front before, suddenly he lost the election, something's gone wrong here. And that sets us up for quite a period, potentially, of contest, illegally, otherwise, in the courts, elsewhere. Who knows what's going to happen? And that's what makes this election, again, so uncertain.
Okay, and Erik, I misspoke. You're of course advisor to the other red bank, UniCredit, not UBS. When you look at, how markets are positioning themselves, they're unwinding at the margin a little bit of a Trump win, but it's impossible to say, really.
Yeah, it feels that way. I think exactly as you said before, when we were in Washington at the IMF meetings, I was surprised that somehow markets persuaded itself that Trump was well ahead. And as you said, there was no indication that this was true. So I think what is seeing now is a little bit of that sort of realization that, we got ahead of ourselves, and you're sort of getting nervous about it. So as you said, I mean, we don't know. Nobody knows today, I think you can say. So, but the market had priced itself suddenly as it was a quite clear victory for Trump, which seems crazy.
But Erik, also no one really knows what a Trump presidency second time around could mean for the world economy, or do we?
Oh, we do. Very bad. Very
so extra
bad. Inflation,
tariffs.
Yeah, I mean, this idea that he sort of walks away from his pledges of tariffs, for example, and this sort of, it is an illusion, right? It's wishful thinking. We saw it before. He's been saying it again and again. Maggie Haberman at the New York Times, who have followed him more than anybody, has said this is crazy. And you can start with what we also saw, which is G7 in a world now that is so fragmented, where G7 is the one sort of a body where liberal democracies can work together. It was basically dysfunctional last time. It will be again. So very, very troublesome if he wins.
Rosin, you were alluding to the fact that actually we don't really know what the voters voting on. I mean, but it's the economy. The economy is good, but they don't feel it in their pockets. What's been the most surprising thing in this campaign so far? There's been many celebrity endorsements.
Well, that's right. But the celebrity endorsements have been pulling the voters in who already know who they want to vote for, in a way. Elon Musk, that's very much speaking to the respective choir in the Trump camp. Some of the celebrity endorsements that have come for Kamala Harris, it's who gets the ones in the middle. It's almost like two chickens and a bunch of feed in the middle. And the feed is the thing you really need, right? And who's going to get that? I mean, in a way, I shouldn't be surprised, but I am surprised by the lack of policy in this election, just how much it has become about personality and individual personality. And again, the question of, what are you if you're a Democrat anymore? What are you if you're a Republican anymore? What's the identity in all of that. It's simply about the personalities of the two people who are contesting this election, and not alone around policy. And that's maybe why voters are really waiting to the last minute or undecided, because if you're a voter in the end, what are you going to vote for? It's the economy and how you're going to feel in your own family, your own job, your own security, your income and so on. And if you don't know that, you don't know, again, domestically, at least economically speaking, what does a Trump presidency mean for you? What does a Kamala Harris presidency mean for you? And you don't understand where they lie on policy domestically, it's really hard to choose. And so I find it quite surprising. It's all just about the power of their personality.
But, Roz, I mean, what I hear more and more, or at least for certain people on the Republican side, is I wish I could vote for someone with Kamala Harris's personality, but Donald Trump's policies. So would he even be good for business?
Well, it's interesting. We saw this at the FII, a conference that we were involved in Saudi Arabia last week. A lot of the big banking CEOs, finance chiefs who were speaking there were saying they believe that Donald Trump would be good for the economy and good for business particularly, like get out of the way, allow business to crack on and do what it needs to do. And so a sense that economically they do see him as being better for their business than Kamala Harris. But again, what you don't want to have potentially is Donald Trump's erratic behaviour when it comes to foreign policy, in particular, just deciding one day to pick a fight with China, the next day pick a fight with another country and then change his mind the day after about that fight. So it's very difficult from a global perspective to operate with the US president who changes his mind every 5 minutes. So perhaps you want the coherence, maybe the kind of pragmatism of Kamala Harris, but there does seem to be some popularity around his policies for business.
Erik, I mean, you said Donald Trump is bad for all economies, but actually does Europe have more to lose than, the domestic economy or even than China? Yeah, I mean, it's... So let me start by saying I take a little bit sharper view on this. I mean, I think it is businesses can believe whatever they want. Deregulation is not number one issue in America. I mean, every business like deregulation. A lot of it is environmental stuff. Do we really want to deregulate a lot of the environmental legislation in America? I have my reservations on this one. And in terms of tax cuts, there is no economic evidence that you get a big boost for the type of tax cuts that he talks about. And tariffs we have talked about, we know it's bad for growth for America, for American consumers, right? And then we haven't even talked about what would Europe do, what would China do if or when he does his tax increases. The idea that he sort of comes out and we all call him up from Europe or China and say, oh, you know what, let's make a deal. We buy a lot of whatever, Tesla cars made in America. It's an illusion, right? We have never seen this type of policy approach without the other side doing something similar. It's so the risk of a trade war and this kind of an accelerating kind of a nationalization of policies increases significantly. So I'm deeply frustrated with the titans of American industry and finance who say it doesn't matter. How in the world can they have this conclusion? I have my suspicion, but I mean, papers have written about this, but it's not real. Erik, point taken. We'll get back to that a little bit, in a little short while. Erik Nielsen from UniCredit, Ross Matheson, Bloomberg's EMEA News Director. Now, coming up, we take a look at what the outcome of the U.S. election could mean for Europe's economy, and we delve into a little bit more what Erik was saying. That's next, and this is Bloomberg.
Thursday, the Fed decides.
Is this a Fed just dealing with debt and deficit?
It's about the election. It's about the Fed, especially at a time where you have those yields creeping higher.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We now see the risks to achieving our employment and inflation goals as roughly in balance.
We've got a statement, a decision, and a news conference.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Welcome back, everybody. Now let's take a closer look at how the U.S. election is being viewed here in Europe. Still with us, Erik Nielsen, Group Chief Economics Advisor at UniCredit. Erik, thank you so much for sticking around. When you look at some of the concerns or the question marks that many European leaders have over Donald Trump, is there any way of Trump-proofing the European economy now?
No. I mean, Europe is in a difficult space already, and not only because of America, but because the model of exports doesn't work in this post-globalization world. So in Europe, we have to get domestic demand going, right? So that's the beginning of it. But getting somebody in the U.S., if Trump, God forbid, becomes president and does tariffs, which I'm convinced that he will at least try to do or begin to do, is bad for Europe, right? I mean, it just makes our life more complicated. I mean, the optimists say that is the spark that won't get Europe to get its act together, right?
But led by whom? I mean, this is a question.
Right.
Olaf Scholz is very weak, and I don't know whether he'll last for that much longer, and whether that's linked to the economy.
That's right.
But also, it's the same in France and other major countries.
Yeah, I think that's right, exactly. So it's too optimistic to believe right now. I mean, we have a new commission and a good commission as far as I can judge, but sort of big steps forward for Europe always starts with Germany and France. And we have weak leadership both places. So it feels unfortunately too optimistic to hope that a lot will happen. There'll be something on the sides, but it's difficult.
What, Erik, do you think needs to happen in Europe for this catalyst? I mean, if we see, for example, the coalition in Germany not surviving, does that have wider implications for the bloc?
Yeah, I mean, and there's certainly a lot of rumors now after Friday's surprise by Finance Minister Lindner. So maybe we get elections in March or they're about 6 months earlier than otherwise. And if the opinion polls are broadly right, you get Merz as the next chancellor, most likely, according to the opinion polls. We don't know exactly what he stands for on this, but generally speaking, I think it's realistic to think about progress on the internal market, capital markets union, banking union, sort of thing. The stuff that is not strictly budgetary, right? They're worried about the budget, too worried in Germany about the budget, and get that wrong, in my opinion. But the private sector can do a lot. And deregulation in Europe would be a very good thing. And I think that shift in German politics, according to the opinion polls, would go in that direction. And Macron would follow, and the government would almost certainly follow. So there are areas where we could see progress. I
mean, do you see what's the right way of dealing with China, given still the need of having such a large partner, but having to be very careful about what kind of partner they are? Yeah,
like most economists, I'm a strong believer in free markets and not industrial policies and all the rest of it. The reality is that China has been subsidizing through various ways tremendously, sort of about 10 key industries. The EV is your perfect, but solar panels, you have it across the board. And I think there is a time when you have to say we cannot see our industries closed down and be giving away. So I think I would hope that one doesn't go down too far the tariffs route. But if that's sort of what has to be done, in that space, I think there is no choice, even though I really dislike it. I would have hoped that one could sit down with the Chinese and talk about it. But again, we know what the Chinese problem is. It is lack of demand, domestic demand. Yeah. This is the issue. And they are in a very serious bind because of deflation. This is the pushing on the string is what they've been doing on the monetary policy side. This is not going to resolve the deflation problem. And it's a very indebted economy, so it's very dangerous, right? So hopefully somebody can explain to them. Actually, I'm sure that the Chinese economic leadership understands. Yeah. The question is probably the top, where everything has to be signed off, I suspect, but I'm not a China expert.
Erik, I mean, the other thing is that we're seeing like a big trend in European countries and the UK of taxes rising. I mean, is this just a consequence? You have high level of debt, but this is also a consequence of the high spending that happened in COVID. Yeah. Is this just the way that most European countries will have to go?
Yeah, I think we have to accept it. I mean, you mentioned the UK. I mean, last week's budget here, I don't share the wide criticism of the government's tax hikes. This country is about 7-8 percentage points of GDP below, say, Germany in terms of taxation of the overall economy. And the Brits demand the same type of public services, of education, healthcare, pensions, defense, and whatever. How will they fund it? But in addition, we have the climate change, we have the need for further defense and other things. And I think the reality is that Europe, we will have to pay higher taxes or a bigger tax base. I mean, this is a complex issue. But to think that we can find efficiency gains only, or we can borrow all the money, it's not realistic. So we are going in that direction.
Will the UK plan lead to higher growth? I mean, if you have growth, it just makes everything better, of course.
Yeah, I think it will. I mean, I think it's in investments. I mean, if you're investing in NHS, the healthcare system here, and you can shorten the waiting list, and you can get people back to work to a large extent. The number of people who are out of work because of long-term sickness in this country is huge, right? So fundamentally, good public investment will enhance long-term growth. I mean, that is economics 101. Now, how you implement it and the reforms that's needed and stuff is also important, and we don't really know what they do there yet. But without the money, I don't believe you can do it.
Erik, thank you so much, as always, for joining us. Erik Nielsen, Group Chief Economics Advisor at UniCredit. Coming up, oil prices rise after OPEC Plus delays an output hike and Iran ramps up its rhetoric. More on this next, and this is Bloomberg. Well, oil advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated again in the Middle East. Now, for more, Bloomberg's Jumana Bersace joins us from the world's largest energy event, ADIPEC, in Abu Dhabi. Jumana, good morning. So what else did we learn from the OPEC Plus decision?
Yeah, well, it's a good place to be at the largest energy conference on the back of this decision out of OPEC+. It was taken late last night, Francine, and there had been lots of questions as to whether or not they were going to go ahead with this projected increase of production in December. They were due to put back 180,000 barrels per day, but it turns out they've decided to postpone that decision just by 1 month, perhaps buying a little bit more time. So what we're seeing this morning is a bit of support coming through to the oil market, but again, the longer-term questions that have been surrounding OPEC+ decision-making are still there. We talk about some of the demand concerns. I heard your conversation just now with Erik Nielsen talking about the deflationary pressures coming through from China. In addition, you have to think about the big increase in non-OPEC plus supply and the fact that U.S. production has continued to go up even under a Biden administration. One of the big themes here, of course, is what happens post-U.S. elections with that oil production coming out of the U.S. and not just U.S., further supply coming from the likes of Brazil, Guyana as well. So these are longer-term questions that OPEC plus have to grapple with. In the short term, though, we are seeing a bit of support. Plus, add to that some of the geopolitical considerations with Iran over the weekend, saying that they may also have to respond to the Israel attack on their infrastructure from a week ago.
So, Jumana, what else are we hearing from ADIPEC?
So big themes, and you know what, Francine, you're not going to be surprised to hear this, but AI has also come up as a big theme this year at ADIPEC. Some of the other major topics have been about the growth of energy demand coming out of the global south, emerging market economies, the transformation of the energy grid with the big transformation that's going on in wind and solar energy. But AI has been a dominant theme, and I just want to pick up on some of the comments given by Dr. Sultan Al-Jaber, who is the managing director and CEO of ADNOC this morning, and he was saying over the next 6 years, data centers will more than double, requiring at least 150 gigawatts of installed capacity by 2030, and even double that again by 2040. And so you have all of the biggest industry leaders from around the world, policymakers as well, thinking about the outlook for the energy complex looking ahead. And yes, we can talk about short-term hydrocarbon drivers, but more medium-term, long-term, there is a huge energy demand shock coming, and that is in the form of population growth, but also this explosion in data centers as well that is going to really ask for a lot of energy. Where the energy source is going to come from is a big question for the next decade.
Jumana, thanks so much. Jumana Arsecha there at ADIPEC. Coming up, our interview with former British ambassador to the U.S., Nigel Sheinwald, on the eve of the U.S. election. That's coming up shortly, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. These are your top stories. With just 1 day until the U.S. election. Polls signal a close race as the two candidates rally last-minute support in the battleground states. Now, the dollar falls the most since late August, while Treasury yields drop as some investors fear the so-called Trump trades. Plus, oil rises after OPEC Plus members agreed to delay a production hike, and as Iran is reported to be planning a strong and complex counterattack on Israel. Now, U.S. Vice President Kamala Harris and former President Donald Trump remain deadlocked in opinion polls ahead of Election Day tomorrow. New surveys have them neck and neck nationally and across the battleground states that will decide the outcome. So let's get more from our Bloomberg senior writer, Stephanie Baker. Stephanie, thank you so much for joining us. When you look at the key takeaways, first, do you believe the polls, and how close are they?
Right. So if you believe all the polls, this is neck and neck, a dead heat. There are two theories of the case. One is that the polls are undercounting women voters and how angry they are with the Dobbs abortion decision, and that they're going to come out in record numbers for Harris. The other theory is that actually Republicans are coming out in really strong numbers, that Trump has gotten historic support amongst male voters, increased support amongst black male voters, and that he could win the day. So it's really hard to tell. There has been a lot of discussion that the polls are noisy because there are a lot of right-wing leaning polls in the mix that are relying on faulty data. So it's going to be really hard to tell. I will be looking at Georgia and North Carolina, the first East Coast states to be reporting. There'll be about 16 East Coast states closing at 7 p.m. Eastern time, midnight in London, and Georgia and North Carolina are, they count votes quickly, so I'll be looking at those polls and what they're indicating.
But, Stephanie, this could be a very contested election, and it could take, so you're looking for these two swing states to kind of give us an indication, but it could take, I guess, many, even weeks to find out who is president.
It really depends on how close this is. Yeah, if it is very close, we could be in for a long haul. Pennsylvania looks very close. There are already lawsuits over some registrations there. So it depends. If it's neck and neck and we're down to a few thousand votes, this could last for quite a while. What's clear is that I think the House race will take a lot longer to settle, as will the Senate. But I think that this could be a quicker result depending on the margin of error.
Stephanie, thank you so much. Stephanie Baker there, our Bloomberg senior writer with the latest on the U.S. Now let's get more on the U.S. election and bring in Nigel Sheinwald, former British ambassador to the U.S. from 2007 until 2012, for the perspective of how foreign countries are looking at this. Ambassador Sheinwald, thank you for joining us. When you look at Europe, when you look at China, who has the most to gain and win from a Trump presidency?
Well, I'm not sure that anyone has a huge amount to gain internationally from the Trump presidency, apart from maybe Russia. I'm sure that Vladimir Putin and Benjamin Netanyahu, perhaps in Israel, would be the two obvious ones who would see a Trump victory as to their personal and national advantage. But I think more generally around the world, perhaps even in China, there'll be concern about a second Trump term, because of the uncertainty and because of what he said on the campaign trail about his policies if he comes in. And I think it's very unwise for people to assume that there will be something of the Trump 1 effect of grown-ups in the room reining back some of Trump's instincts, although I don't think that happened as much as people now claim. Nevertheless, it seems unlikely to happen in a second term, where you'll have Trump unbound, a more vindictive approach, and packing the administration and maybe jobs in the armed services and elsewhere with people loyal to him, perhaps without the seniority and experience. So I think there's worry and anxiety around the world, particularly probably in Europe, where there's a direct challenge to NATO and a direct challenge to the support which Europeans have given to Ukraine.
President Trump has talked about tariffs even at 1,000%. He talks about borders. Are you most worried about security and what he would mean for NATO, as you mentioned, but especially for Ukraine?
I think that's probably the issue which is most on people's minds, is the possible disruption undermining of NATO, even if the United States stays in NATO, a United States which is not prepared to support and defend its allies, and which is undermining the sovereignty and the independence of Ukraine, is going to put it at loggerheads with, with its European allies, just at the point where the Europeans at last are starting to spend more money in defense. And even in Ukraine, the balance between the US and Europe in terms of military and other assistance is much more 50-50, or maybe even more overall, the Europeans putting in more. So the idea that Europe is still freeloading in the way that perhaps it was decades ago, I don't think is right today. But I think it's a more general thing. I think when you look at British and European positions on the big issues, on the Middle East, on climate, even on handling China, I think that there is just too much of a gap with Trump. We don't know what Harris's policies would in the end turn out to be. She hasn't been a particularly well-known figure internationally in the 4 years of the Biden presidency. That's not to her discredit, but she's been focused elsewhere. So we don't know exactly where it'll be, but it feels as though she would be a more conventionally supportive and internationalist president. I'm sure there will be nuances, for example, on the Middle East, which might bring her actually closer to European positions. But I think Europeans would be happier to have that level of uncertainty with her, generally speaking, than the huge uncertainties and likely divisions and conflicts with the Trump second term.
But Ambassador, again, it does feel that even under Joe Biden, allies have had to fend more from themselves when it comes to national security, to international matters, and foreign affairs. So is there a fact that no matter who wins actually the White House, the Europe just needs to be stronger, and the UK needs to be stronger? Absolutely,
I agree completely with that. I think it's starting. I think it started after the Russian invasion of Crimea in 2014. It didn't start with Trump. The UK has been advocating for a long time for ourselves and for Europeans to step up our defence spending, and generally speaking, we are. The European Commission, the UK is not any longer part of the European Union, but the European Commission is putting a lot of emphasis on defence in the 5-year term, which it's just embarking on. So I think that left to its own devices, Europe will continue down a more responsible path. And the question is whether it's given the time to develop its defence and security capabilities over the years ahead, or whether an incoming president precipitates a real crisis, which would endanger the security of the continent, but also give Russia a much stronger hand in dealing with the problems of the day. But I agree completely. I mean, Europe needs to change. The UK needs to continue really seriously on its path of increasing defence expenditure and being very serious on issues of international security. But I think the UK has a reputation for that. I think the problem is more on the European continent at the moment.
So, Ambassador, what's the right way in dealing with China in all of this turmoil? How should Europe look at China in trying to maybe break away from the US or fully align with the US on what the right way, for example, on tariffs is?
I think that Europe has already moved, just as opinion in the United States on both sides has moved in the last 5 or 10 years to a much more hard-headed position, much more conscious of the national security, technological, commercial threats than perhaps was the case 10, 15 years ago. So I think that is happening. I think that Europe will always want a safety net in the relationship with China, in much the same way as I think the Biden administration is trying to achieve. The sense of avoiding unnecessary crises and conflicts, better understanding each other's bottom lines, seems to me to be an essential accompaniment to a tougher position on trade and technology, which the US has taken and where Europe has overall followed. And I think a UK government will be a partner for the United States, provided that it doesn't go recklessly into a conflict situation with China. So I think the goalposts have moved. There's been a shift in European as well as in American thinking on China. But we won't want to move to a position of complete confrontation. Nor do I actually think that Trump will. I think that Trump, wants to go hard on the trade side, and our worry on the trade side will be that excessive tariffs will trigger a much wider international trade war, which will be disadvantageous just as much for European and American citizens as it would be for anyone else in the world.
Is there anything that we're underestimating that Donald Trump would be good for Europe?
Well, I think his instinct for deals and for peacemaking can could conceivably come off. I don't think it did come off particularly in the first term. The initiative with North Korea did not work out because I think the Trump administration were too naive in their approach there. The Abraham Accords with Israel were potentially very, very valuable and far-reaching, but of course they missed out on the Palestinian track, which has now come to the fore. And is indispensable if there's going to be a new alignment in the Middle East, which I'm sure the UK and Europeans would ultimately support. But I don't think that there is too much other than believing that he might pull a rabbit out of the hat in terms of a desire for negotiation and a degree of creativity which is needed if you're going to be an effective negotiator.
Thank you so much, Nigel Sheinwald, there, the former British ambassador to the U.S. Now, coming up, RyanAir cuts its passenger outlook and it's blaming Boeing. We'll have plenty more on corporate stories. Of course, it's going to be a big week, not only for central banks, but politics with the U.S. election tomorrow. This is Bloomberg.
We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer.
Well, that was the RyanAir Chief Financial Officer, Neil Sorahan, speaking to us earlier about the impact of Boeing delivery delays. Now, RyanAir is set to cut its passenger growth target for next year. The low-cost airline is blaming Boeing's ongoing strike and production issues. Now, in a moment, we'll also talk Berkshire Hathaway with Charlie Wells. But first, let's get more on RyanAir with Bloomberg's global aviation reporter, Sid Phillips. So thank you both for joining us. Sid, what is RyanAir saying about growth?
So RyanAir is saying that they can't really grow as fast as they expected to grow next summer because essentially they aren't getting enough planes from Boeing. And Boeing's sort of struggling with production because ever since the strike, which is now, hopefully we're going to see a vote on that today, but since the strike, they haven't been able to produce any 737 MAX jets, and that is really crucial to Boeing's growth, to RyanAir's growth plans.
So what are the trends, I guess, on prices?
So pricing has actually been a sore point for RyanAir because last summer was not as strong as RyanAir expected it to be, and they sort of blamed the cost of living and the fact that customers are sort of facing much more pricing pressure, and so they're sort of holding off on bookings. And so we have seen some softening of pricing. RyanAir says that we're sort of that softening is moderating now, and we sort of will see pricing go up as we get along.
Sid, there's been so much Boeing story. We literally come in the newsroom and the first thing we say is, book Sid, there's something with Boeing. What do we know about the vote strike today?
So the unions recommended this vote. It's the third time they're going to vote on a deal. The union said that this deal is the best that they can do. So they recommend that members accept it. There's 33,000 members voting today, and we will know later today about what that resolution will be and whether or not they accept the deal, which is basically offering them 38% increase over 4 years, and they've also offered a $12,000 ratification bonus. And so they're looking to see if that gets accepted and basically get the workforce back in the factories, back producing aircraft, and starting delivering aircraft and generating cash.
Sid, infrastructure in the U.S. is frankly a big problem, especially when you fly long haul. see the difference between some of the European and the Asian airports. Do we know tomorrow's the U.S. election? I mean, is there any plan from one candidate to actually change, if not air travel, certainly the infrastructure that supports it?
I mean, air travel hasn't really come up, but I mean, all the candidates have talked about spending and increasing public spending. So we might see some more. I mean, we've already seen like massive projects underway in some of the biggest hubs in the U.S. And so like JFK and other places where they are expanding and spending lots of money on modernization of the terminals and everything else. But there still remains things to be done, including modernization of the air traffic control systems and those sort of things that you don't actually see, but those things are crucial for aviation. So it will be interesting to see how the next president decides how to spend money on aviation.
Sid, thanks so much, as always. Sid Phillip there with the very latest, of course, on RyanAir and Boeing. Now, Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. Now, the conglomerate also cut its stake in Apple again, this time by about a quarter. Now, for more, let's bring in Bloomberg's Charlie Wells. Charlie, thank you for joining us. So when you look at Warren Buffett, he still hasn't anywhere to deploy his cash pile. He's just sitting on it.
I mean,
not literally.
It feels like it. I mean, $325 billion. You could buy most companies with that amount of money. But Berkshire Hathaway isn't even repurchasing their own shares. They didn't do that in the third quarter. They haven't not done that since 2018. And I think this just speaks to Buffett's view of valuations probably being too high, not only of his own company stock, but also in the S&P 500, right? Up 20% this year.
I mean, has he talked about a catalyst for either buying or selling off?
You know, he's patient, right? He talked in May about how, they are happy to sit on the sidelines until they can find an investment that is low risk, but can also make them a lot of money. And I think the thing that differentiates Berkshire Hathaway is that permanent capital. So compared to a lot of other financial firms, they can really just wait this out.
Should we read something into the fact that they can keep on selling also Apple shares?
That was a really grabby point from their third quarter earnings report, that they had reduced their stake in Apple by 25%. And I think, you could see this potentially as, a little bit of caution on behalf of or by Berkshire, given Apple's been slowing down a little bit, particularly in China. But really, their position there had just ballooned over the years. This feels like a trim and also an attempt to probably keep some potential tax hits at bay.
He hasn't talked about the U.S. election, right? He's one of the few billionaires that kind of stayed on the sidelines.
He stayed on the sidelines. He has previously endorsed candidates, and I think something notable is that he's been quieter this election, and I think that's something that, others have commented on other billionaires, but it seems like he's really kind of trying to stay mum there.
All right, thank you both for joining us. Of course, that was Charlie Wells and Sid Phillip talking about some of the big corporate stories that we're watching out for today. Now, coming up, traders prepare for a long night ahead of tomorrow's U.S. presidential election. We'll preview what investors should look out for. That's next, and this is Bloomberg. Now, bankers, traders, and investors are bracing themselves to handle overnight volume and volatility after tomorrow's U.S. presidential election. Many trading desks are being staffed through the night. Joining us now to discuss Bloomberg's markets reporter Valerie Teitel. So, Valerie, it's very clear there was a Trump trade, and now it's being unwound a little bit. And there's a lot of, head scratching and saying, why were the markets so obvious? What does that mean going into the election?
Look, this is a lot of what investors have prepared for. They've built models to try to figure out if on election night, if we swing towards positivity around a Harris win and then swing back towards positivity around a Trump win, what kind of trade dislocations are we likely to see, and how can we take advantage of that? We heard from many fund managers, last week saying that they were busy running simulations with their political consultants and with their economists on just how the election night could unravel. Some traders actually telling us they're more focused on the congressional districts than the presidential outcomes, thinking there'll be more, trades that they could put on when those dislocations happen. And then there's also funds who have taken chips off the table saying, look, we could get big data about the U.S. election out during the Asia session. And the Asia traders are less attuned to the nuance of the U.S. political story. And maybe if I take some chips off the table now, there's some good trades I could put on if Asia does read it the wrong way. So many opportunities out there for traders to be nimble over election night.
Which is why a lot of, I guess, New York traders are going to pull all-nighters.
That's right. Yeah, traders in New York going to pull all-nighters. We heard from J.P. Morgan saying they're going to increase staffing in Europe and Asia in order to handle the surge of volatility coming out of New York. Goldman also saying that hundreds of their sales and trading teams in New York are going to stay there well into the night. Other banks preparing staffing plans if traders have to log in from home after hours. We even heard from one major investment bank saying that they've halted all technology updates this week, so they won't have any computer glitches during this volatile trading hour. We've even heard colloquially from hedge fund managers on this show saying, hey, I'm based in London, but for this week, I'm going to be flying to the U.S. I need to be closer to the ground and closer to my team there.
So what can we learn from other elections?
Look, 2016, if it's anything to glance at, it was a surprise Trump win, yes, but the 2 days following were the two most volatile for the U.S. stock market that year. And then in 2020, when Biden won 4 days after the polls closed, that day was also the most volatile trading for the U.S. stock market. So we're poised to have a very volatile trading session. It's just a matter of when do we get a glimpse over which way it's going and which way it's going to swing. It could take a while to declare a winner, and market dislocations could become very confusing over that time. And not forget, we have the Fed meeting on Thursday, which can compound that confusion.
Yeah, there's a lot going on. Stephanie Baker is saying, watch out for Georgia and North Carolina, that we could see through the night, that first night from the 5th to the 6th. Valerie, thank you so much. Valerie Teitel there with the very latest on what some of this volatile election night could mean for traders. Now, let's also take a look at what's coming up this week. On Monday, we have China NPC convening. Tuesday, tomorrow, of course, it's the U.S. election. Then we have a lot of results, not over Novo Nordisk, one of the most valuable companies in Europe. We have Qualcomm over in the U.S. and ARM. And then we have a lot of central banks. On Thursday, it's the Fed. Yes, it's a Thursday. And then we also have the BOE decision with a rate cut on the table. Up next, to Bloomberg Brief, Danny Berger, Manus Cranny in New York. And this is Bloomberg.